So it is November 2025. What's going on with our local housing market? So I think we're seeing a little bit of a quietness, which is normal this time of year with the holidays time. The last couple of years we did see it kind of busy all the way up until the week of the holidays, and then busy again and quiet with the week from Christmas to New Year's. So it's interesting to see that we had that little bit of I'd say a little market shift from June where buyers were pickier, and now we're seeing a little bit of a slow period coming in. Not dead, just a little bit slower. So we're gonna watch it. We're gonna see what's going on. I don't think any major shifts other than maybe our market is finally normalizing, where a lot of the other markets throughout the country have seen a lot more, of downward pressure than what we've seen here in the Northeast. We have the election that came out, and I think that weighed a little bit on, a little bit of uncertainty of what's going on. But the federal government is trying to do a couple of things out there to spur some national growth, for housing buyers with the 50-year mortgage and other type of mortgages that are out there. So, when we talk about mortgages right now, the mortgage spread has hit its lowest level in the years between the 10-year Treasury and mortgages. And what that really kind of tells me is that that's more of the volatility is kind of settling down a little bit. People are feeling a little more comfortable into these mortgages, and probably because, around this 6%, it is more of that long-term perspective, probably in a middle point. So, we are seeing, home turnover at lowest rates in decades. This is normal. We've been talking about this, that, more people are staying in their homes. And that's why, especially in our area, we do see more of that supply crunch, which has caused prices to continue to go up. Jerome Powell, chairman of the Federal Reserve, said a further reduction in the policy rate at the December meeting is not a foregone conclusion, far from it. There were strongly different views today, and the takeaway from that is that we haven't made a decision about December. So we've seen a couple rate cuts out there. Obviously, remember that doesn't tie directly into mortgage rates, but that shows that maybe some of those inflation numbers are, getting a little better. We haven't seen any major stuff come off from the tariff. So even though it does feel like it costs a lot more money at the grocery store, I think that is showing the Federal Reserve that it's stabilizing, which is a good thing. And hopefully, we're moving past that. This was an interesting article. 3 reasons the housing market is on the road to recovery. Mortgage rates have been decreasing for most of the year and are lower than they've been in the last couple of years. Number 2, as the lock-in effect eases, more homeowners are selling and inventory is rising back to normal levels. Number 3, lower rates and more homes to choose from are leading to more buyers in the market. So rates are a little bit lower than what that. They have been lower a couple years ago, but right now in the near distant, past, we are a little bit lower than what we've seen. I do see that, people are starting to come out and sell a little bit more. I think hopefully next year we'll have a little bit more of a supply hit the market. And I said when the personal factor outweighs the 3% interest rate is when people are going to start to sell. I think the average homeowner stays in their home probably about 7 years. I think post-COVID with the low interest rates, it's going to be anywhere from 10 to 15. So I think we still have some more of this kind of stagnation to come. And obviously, if we do see more inventory and rates lower, especially throughout the rest of the country, we're going to see some stabilization, and I think we'll see some robust stuff for us here in the Northeast. Mortgage rates are trending down, as we talked about there. Chen Zhao, head of economics research in Redfin, more homeowners are deciding it's worth moving, even if it means giving up a lower mortgage rate. Life doesn't stand still. People get new jobs, grow their families, downsize after retirement, or simply want to live in a different neighborhood. Those needs are starting to outweigh the financial benefits of clinging to a rock-bottom mortgage rate. Like I said, when that life factor outweighs the low interest rate, you will make a move regardless of the fact. Inventory is continuing to grow throughout the U.S. We are seeing that, that year over year with each October, we've seen probably about 5 to 10% more this year overall in the U.S., which is kind of what we see. Even if we don't have a huge amount here, if the rest of the country is kind of giving, some more inventory and some more stabilization, that's going to help consumer confidence here and ultimately push our market up a little bit more. Home sales are expected to rise. So for 2024, the number came in at 4,752,000. The projected number for 2025 is 4,816,000. Pretty close to being the same. 2026 forecast is 5,239,000. Now, we've seen this where last year at this time, they projected the 2025 numbers to be dramatically better. They weren't. This is a 5% growth, maybe even 10% growth here. I don't know if we're going to hit that high overall in the U.S. I think we'll see a little bit more. But as time goes on, this number should continue to trend upward. Homes are now selling at a more normal pace, rather than 3 days and, rather than 120 days. We're hitting an average of about 63 days, couple months. Remember, this is throughout the country, so we do see that. In our area here, we are definitely seeing more of property selling, in that 2 week to 4 week window. If it's sitting on the market more than 30 days, what needs to be done to it? Is it overpriced? Does it need better marketing? Maybe the agent isn't really taking care of it. So that matters. And this is an interesting slide when you look at it. New York, obviously New York City, and we're that suburb of it. We're actually the fourth best increasing market at 2.8, with Cleveland, Ohio being the highest at 4.6%. A lot of other areas have negative price targets coming down year over year. Like I said, we're still positive. So, and I think that's pretty relevant there. And then last on, what are prices looking to do? I think the average between all the national, economic companies that come out there and put these forecasts is 1.7%. Mostly everybody's seeing price growth. The Mortgage Bankers Association is seeing a little bit of price decreases across the country. I do think we will see 2.5 to 5% growth next year, unless we see some massive, influx of, inventory, or massive influx of demand, coming out there. So, we'll watch. Obviously, a lot of this depends on consumer confidence, what's going on in the overall U.S. economy, what rates are doing, all of those things. So I think they all play in. Bottom line, we're still a healthy economy. I think buyers are a little bit pickier than what they were 6 months ago. But I think buyers are out there, and we've seen much more deals come together where both buyer and seller are happy and putting things together. So it's exciting. So if I don't talk to you before, hope you and your family have a happy and healthy Thanksgiving.